And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning, everybody. Welcome to Financial Fitness Friday. I'm Rich Rosso here with Danny Ratliff, CFP Squared. We're so happy you're with us. You know, Danny, there is something to the Washington word salad. I have a friend of mine. Unfortunately, he's getting a divorce. So he called me yesterday. He's really bummed out. And I said, well, think of it this way. You're transitioning to a new life. It's such a nice word, transitioning. What are you transitioning to this weekend? Anything fun?
Man, I hope some rest. Probably not.
I'm transitioning to my bed.
I'm transitioning to whatever my wife tells me. You go here.
Now that, let me tell you, that's a smart answer. I also yelled at the Valero guy on the way in. Tell him to lower his gas prices, Brent.
How'd that go?
He just said, listen, you buying a slushie? That's where I make my money. Don't yell at me. Well, it looks like we, I don't know, we seem to be cobbling together some form of a anemic rally over the last few days, Danny. Don't you think?
You know, this is pretty interesting that we've had such a hard time putting anything together. And markets have been swinging quite a bit. I mean, you look at, what was that, Wednesday, where started off 400 or 500 points down. Then we actually end up getting a little bit higher and then end up the day flat. So kind of an, you know, from a technical perspective, looked like we were losing the wind, you know, under our sails there. But we're cobbling something together, like you said, and hopefully this continues. What's interesting, look at yields.
Yes.
They're flying down right now. Mm-hmm. And I don't know exactly what that means. Is the bond market telling us something? Is smart money indicating that something different is happening than what we've seen over the last several months? I don't know. I would suspect that we're going to continue to bounce around. And it's been interesting to listen to the Fed talk this week. You know, everybody's coming out.
Yes.
And I don't know, you know, in some instances, it seems like they're changing their tone maybe just a tad bit, or are they hunkering down for more hikes?
Well, I like how Powell finally, you know, he actually came out and said, well, no, because he was asked point blank whether there was inflation before Putin, and he was like, nope, we've had inflation way before that.
Yeah.
So his answers seem to be straightforward, but I just don't see how they don't push us into recession to tame inflation. And frankly, they don't have much many arrows in the quiver to do anything about food prices and gas prices. But man, if you want to get some outdoor furniture in July, man, I bet you are going to see some deals. You're going to see some deflation in it and stuff you probably, you know, you may want, but you don't need. But the stuff you need, unfortunately, it takes more than the Fed to break that. Although I do expect we will see some demand destruction in gas prices.
Well, that is interesting to watch. You know, like you mentioned, I think it's a really good point. It's the stuff that you want, you don't necessarily need. And we're seeing already that people are cutting back on the things they want to do. People want to take trips, but you know, we're seeing more staycations. If you look at VRBO numbers, those are actually declining. So people are saying, hey, maybe we don't take this trip. Maybe we hang tight. We stay at home. We do something around the area, because gas prices are changing people's habits.
Right, and it will inevitably do that. I've talked to, just like you do, so many people that are saying, listen, we're only using one car, where we're shifting off, or we're getting all our errands done in one day, and it's out of necessity. So there is going to be some demand destruction that is imminent. But again, we'll have to see where layoffs go. Obviously, Netflix is laying off 300. JP Morgan, I think, laid off some part of their mortgage division, right?
They did,
or
yep.
refinancing division. So eventually we're going to start to see layoffs happening. But yes, it's interesting to see where bond yields are going, because I think the bond market's finally getting the hint that to really tame what we've got going on out there, we are going to need to put the brakes on the economy. And obviously we have been, but maybe this is a hard stop.
But are they implying essentially then that the brakes have been put on? Things are slowing, right? I mean, what do you expect here out of earnings season? I think that's what everybody's waiting for. You know, right now we're in this big kind of rebalance, people with investment policies, their mandates. must get back to their holdings, right? So is that what's pushing the market up right now, or does the market actually feel better? It may just be we've had so much destruction. From a technical perspective, we were seeing a little bit of upside.
Well, I think it also, in some ways, and this is a little bit different than it's used to acting, and again, this is merely a guess, that the Fed, the market wants to hear a strong Fed.
Yep.
The market has lost confidence in the executive branch and in our monetary policy, or at least how it's communicated. So the fact that he is clear and this is his priority, it just might alleviate some of what the market's concerned about. And to your point, we've created quite a bit of destruction across the board in assets. Look at what 401ks are down, right?
What do they say, like $3 trillion?
Over $3 trillion, yeah, more, yeah, over $3 trillion. So, and again, just because you get a reflexive bounce here does not mean the selling is over. But here's going to be your time. This is your time. And hopefully if this sticks. And it's nice to see the markets generally close on a higher note, even though yesterday we pulled back a little bit. For the most part, the market was positive. It's going to be interesting to see how we close over the next week or two. But this is your opportunity to think about rebalancing and getting an allocation to the place you want it to be.
That's a really good point.
You may not have the chance, right? If this is a bear market move, we know this is to fake you out. And
That's right.
For that next leg down. So, but you can have some recovery here, so don't be fooled. Remember how you felt. Get your allocation in the right order for you to sleep at night.
And this is what gives me a little bit of concern, right? Because people do get sucked back in and think, okay, maybe this is the bottom. Things are going to get better. We understand what the Fed's saying. And, let's get more aggressive. And, speaking of that with 401ks, I saw a stat that said, I think it was like 76% of the money that's allocated to 401ks is all in stocks. Mm-hmm. And so you think about the people that are getting closer and closer to retirement. But that does make sense if you start to think about it with the
magical glide paths for target date
magical glide paths. There you go. And how do those guys feel right now? I mean, they're getting beat up a lot more, right? I mean, you think about these talking about investment policies and how they're going to have to stay committed to, a certain allocation, regardless of what the economy looks like or the market for that matter. But, one thing I think that's interesting, or we should note, is that markets typically run out in front of the economy. And so one thing,
and
I think
a lot of people don't really, it's sort of strange. People don't get that. You could be in the middle of all these layoffs, right? Mm-hmm. Everything is going on around you. Like your neighbor's lost his or her job, and yet the market's going higher.
Well, because the market will price a lot of these things in already. So,
right.
Right now, we also don't want people to make knee-jerk reactions, say, oh, my gosh, we're getting out of everything. Because then we feel like, okay, we're going to be in a better spot. The issue will be is that, maybe you do get out of everything and you save yourself 3 or 4 or 5% on the downside. Maybe it's more, right? But when do you get back in is the problem. And we hear from so many people at the end of market cycles who say, oh my gosh, I've been out since the last time this thing really went down.
If you're getting all out,
yeah,
you shouldn't be in stocks. That's the fate. Sorry, but that's the face of it.
But it's hard right now, Rich. I mean, we've been accustomed to really good returns, good markets. We've been in a bond bull market. That's changed here, obviously, very quickly this year.
Yep.
What do you do? Where do you go?
Oh, let's talk about that when we get back. Without the Fed money and the juice, what does the market look like? And we're going to be talking about tax alpha. What's it all about, alpha? Forget it. It's an old joke. We'll be right back here on Financial Fitness Friday.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Hurricane season is here, and along the Texas Gulf Coast, we know how to prepare. What we don't always know is which way the storm will go, and if a hurricane does come your way, whether your house will flood. Fortunately, you can get flood insurance. Unfortunately, flood insurance rates have skyrocketed. Don't be at risk. Let the specialists at RIA Insurance assess your needs and shop your coverage for the best rates possible. Another service from realinvestmentadvice.com. Click on the insurance tab, realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Could your job still be at risk? A new normal can still include new obstacles. A severance package can be an emotional as well as a financial decision to consider. Wouldn't it be comforting to review the options for you and your family with an objective financial partner? At RIA Advisors, we're here to help. From severance pay, tax timing decisions to how to maximize unemployment benefits, the RIA team wants to make sure you can do what's best for your family. There's no charge for a consultation, so reach out to RIA Advisors, 855-RIA-PLAN, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Welcome back. There's that old meme with the dude with the white hair, and he's smiling with the cup, and he's looking at the computer. He's got the beard. You know which one I'm talking about, Danny?
No.
Oh, but he's looking at his computer and he's smiling, and in the first panel he goes, "Putting $20 in the tank," and then he looks at the camera and he goes, "The tank?" Asking, "Is it in yet?" Thought that was pretty clever. But Danny's like, time to get kicked off the air again.
Really don't know what you're referencing here, Rich.
Gas prices are high. And my tank is very big. So the way to look at markets over the next decade could be very different, Danny, without the Fed juice. Although I know the jury is still out regarding Fed juice. Is the punch bowl put up at the top shelf or rarely used again? Or is it going to be sort of ready to go? I mean, I don't think anybody knows the answer to that. So then we're going to be right back to this whole distortion of prices across the board for every risk asset. And, Powell doesn't mention crypto very much. I got a funny story about crypto I got to bring up to you. But he doesn't mention it much, but just that destruction in that speculative asset that also bleeds over to stocks and then real estate and everything else, how they've distorted prices over the last decade plus. I just don't think you should be going back there anytime soon.
So we could make a pretty good argument that it's probably not the wrong thing to put it on the top shelf and leave it there for some time, right? Mm-hmm. But what happens in the interim, that's what's problematic.
Right.
Like yesterday, we had a conversation looking at a lot of companies. There are some companies that have a recession priced in, and there's some that they're not there yet. And so this is where, I tell people, look, I'm optimistic. I really am, because this is what we've been waiting for. And you hate to see any gains erode.
Well, Elon Musk says, listen, recessions are cleansing. You get rid of the zombie companies. It's about time. We never let cycles happen. I never understand why we just don't let cycles occur.
That's a great point. Everybody's so concerned about, are we this is going to put us into a recession? Well, yes, likely, if we're not there already. But what is wrong with actually having a recession? It's a part of the business cycle. All of a sudden, we've just kind of expected that we're going to be able to put this aside and we're not going to worry about that today. The issue will be is that the longer we do that, the bigger it gets and the more issues we will have.
We just don't want to feel any kind of discomfort. That's how we are as a country now. Gosh, we have a little bit of discomfort, cycles. We have business cycles. Oh, we can't handle that. It's about time we handle something. So let the cycle occur. Let the excesses cleanse. And to Danny's point, you are given a better landscape to make good buys. And I do think it's also going to go back to, Danny, doing much more homework to select your investments. And I don't really know, candidly, how many advisors are able to do it. It's going to be back to old-fashioned studying companies, cash flows, and so forth, things that we're very, very comfortable with doing. Unless you're going to outsource it to other companies to do that kind of work, and many advisors do that, to go ahead and select investments, it's going to be much more difficult without the Fed intervention. But
so you mean you can't just buy the index?
Yeah, I don't know, but maybe this is my own opinion. I think this passive stuff over the next 10 years is going to fall out of favor. There are cycles where passive is going to work and cycles where it's not. And I think if the Fed's pulling away, it's a cycle where passive is not going to work. Doesn't mean you can't own it. You just might be a little bit more disappointed on how things go.
Well, I think this is a great opportunity for somebody who understands balance sheets, who understands fundamentals. And I know most people are like, what? What is that? Because it's been so long. We've traded on momentum and Reddit boards and all these things that typically you just don't see, which give us that, a little bit of a heartburn when you look at some of these things. But now we're getting back to where you're going to be able to look at balance sheets. You're going to be able to look at the macroeconomics once again, and these things will matter.
I want you to go down in the bunker, and then when then there's like the nuclear blast, and you come out, and all the trees are bare, and you don't recognize anything around you. That's what the Reddit boards, like Wall Street Bets, looks like right now. When you go there. And
you just hear a big echo?
Yeah, you see the despondency and the memes and all this other stuff. It's people are shell-shocked walking around in that board. It's not.
So speaking of boards, though, YouTube, so if you guys haven't followed already, go to the Real Investment Show on YouTube. Question, so are passive funds no longer viable? I mean, and I'm not saying I don't think probably not no longer viable, but there's probably more opportunity with either picking sectors,
right,
or individual equities and looking. This is where I get excited.
Or maybe they have active management within the indexes.
Correct.
Maybe you see. Let's put it this way: you just got to do more homework. It's not just going to be like let's set it and forget it. Now, it doesn't mean you're going to lose money. It just means that you might be disappointed versus trying to be opportunistic. And there are a lot of active ETFs that have been around, First Trust and all that do a decent job following a certain methodology to go ahead and do that. So you might see more money moving from the market cap index, passive stuff, to more active-based, maybe equal weight, maybe, some sort of more of a complexity to how they filter the companies within the indexes. So, I mean, listen, this is a guess.
Well, but
this is purely a guess based on the Fed punch bowl being put up at the top shelf.
Correct, but it's also very important to understand that what are their mandates? What do they have to stick to? Where, a lot of times we feel like some of these guys are very flexible, and we find out they're not, especially when you get into a time like this where everything is down and cash is king. That's a big difference.
Everything correlates to one when stuff like this happens. Yeah, I mean, I always tell people, listen, oil rolls faster than ketchup. In other words, you might get hurt more in a cyclical stock than you would in a consumer staples. Like we saw yesterday, for example, we saw a lot of the non-cyclical stuff do really well, right? Staples, utilities, real estate investment trusts. You started to see more money there. And some of the growth stuff did okay, but not as good. But so yesterday I talked to Lance. Funny part is he was on Charles Payne. He's on Fox Business a lot. He does a really good job with Charles. They go back and forth, and he's on there. But the woman before Lance's segment was a Bitcoin expert. So here's a couple of things she said that are really, really good. I was like, Lance, did you hear her? First she goes, we need regulation.
Wait, what?
She goes, this would change the whole scope of things. We need badly regulation in this space. But yeah, why did you just go what, Danny? Why did you just do that?
Well, because the whole idea and the sex appeal behind this whole thing has been that there's been no regulation. We're trying to get away from fiat currency.
We don't want the man in our business.
And now you're going to put him in?
Oh, she's like, we need that so bad. And then she's using Putin as a role model because she's saying, well, see, he says the dollar and the bonds, the U.S., and you know what? Bitcoin's going to replace bonds.
What?
I see Bitcoin, and I'm like,
Wait, Bitcoin has a yield
yeah.
and a guarantee?
And
Hold
are
on.
there assets backing that? Like a bond? I mean, this. Listen, you have pants older than this woman, okay? But I will just tell you, the stuff that was coming out of her mouth to make the case with a straight face was enough for me to call Lance, go, did you hear that? Or is that a brain tumor I got going on here? Okay, we need regulation. It's a good thing. What? I was in bizarro world during that segment.
You felt like you came out of the bunker and like, what world
Yeah, I'm
is...
going back down into it.
What is happening?
Yeah, Lance caught that too. He was cracking up. And he was cracking up. So if you ever get a chance, I think Lance is usually on a Thursday or a Friday. Usually, as soon as Lance is on, the market tanks. So you take it for what that's worth.
So we need to keep him in his bunker.
No, it's usually like that hour where Charles Payne is on. I think it's like 2 o'clock Eastern.
Yeah, everything's either fading or...
Yeah, everything
you
is
finally
like
get a
everybody's
little bit of-
exhausted and they're done and they don't want to talk about anything. And it's, you see the S&P go into the red every time that program is on. But Lance does a really good job with perspective on it. But man, some of the guests on Bitcoin, it's just funny to hear it. We need regulation. Elizabeth Warren for Bitcoin. So good thing here is something called tax alpha. And Danny, how many years have we been talking about the benefits of Roth IRA and Roth conversion? Unless you think taxes are going to stay the same or go lower. Good luck. So with depreciated assets in an IRA, isn't this a really good time, depending on your situation and the homework, to move the assets that have been beat up the most into Roth and then gaining the appreciation on the tax-free side?
Yeah,
Don't you think that's a smart idea?
I do. I think we're getting there. Historically, this is something we like to do in the fourth quarter. We get a really good understanding as far as what your tax implications may be, and then we can make some moves, barring knowing what that is. And so I think that now we're having some assets that have declined. So it's either, we're getting into this area. Well, like you mentioned earlier, Rich, is this something where we get everybody pulled back in and then we see another leg down, like most bear markets? Mm-hmm. Or is this something where things are going to get better? So it really depends on your view of what's going to happen here. But I think in the next several months, we're going to have a really nice opportunity to take depreciated assets, move them from the Roth, move them from the traditional IRA or 401k into a Roth, and let those assets grow. We have the wind at your back. I mean, that's going to be a really nice aspect. I think that's something we'll talk about when we get more.
Yeah, we'll talk about
the
this.
break.
If you want to do Roth conversions, surgical Roth conversions to maximize the tax bracket, this could be your year. We'll continue the discussion when we get back here on Financial Fitness Friday. We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Every day this week so far, CNBC. Markets in turmoil. Every day. Yes, we know. We get it. Markets are in turmoil.
Is that like starting every newscast with breaking news?
Yeah, CNN recently is making some changes. They're actually going to stop using breaking news as much.
The Real Investment Show podcast. Same show, your schedule.
They broke the breaking news. Not every story is breaking news.
At realinvestmentadvice.com.
Not every story is news.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
Have market gyrations caused you to lose sleep? If so, it's because you have more risk in your portfolio than you realize. It's time to reevaluate your long-term investing strategy with RIA advisors. Our disciplined approach can help eliminate unnecessary risk. If you think it's time to work with an advisor who puts your interests first, it's time for Real Investment Advice. RIAadvisors.com.
You're listening to The Real Investment Show.
So if you look around the edges on YouTube, and we're on the YouTube channel, good morning everybody, you'll see Brent's got a lava lamp behind him. But the lava is dead. Sort of like recharacterizing a Roth conversion, Mr. Cheese. This answer might make you lactose intolerant, but unfortunately, you cannot undo a Roth conversion. So see, it makes it tougher to try to time it. We try to do them generally in fourth quarter of the year, unless we get a market event like we're having right now, where we have to go for the opportunity. Now, keep in mind, if your tax rate is going to be the same in retirement, then, where Roth could come in handy even still might be the fact that instead of, as a legacy asset, Danny, in other words, we have the 10-year rule. We're going to talk about that in the last segment. We have the 10-year rule because now we're going through a new Secure Act 2.0 and more stuff and more confusion. But generally speaking, a non-spouse beneficiary has 10 years to drain your IRA that they inherited from mom or dad. If my child's going to be pushed into a higher tax bracket or is in one, then from a legacy perspective, I may want to leave them Roth money, even though they still have to take it out over 10 years. It's tax-free. Makes it a lot easier. But you have to go into a Roth, I think, with some idea, based on where we are as debt as a percentage of GDP, Danny, that taxes are going to go higher. And not only that, what a lot of analysis doesn't take into account is the taxation on Social Security and IRMA. You got to look at these all together. It's not just the marginal tax rate. It's taxation, 50 cents, 85 cents on the dollar, depending on how much you're taking out, how much your Social Security is and other investments. And your IRMA table, which increases your premiums for Medicare Part B. You've got to look at it that way because you might be surprised that you're not going to be in the same tax bracket just because of those things.
Well, that's the interesting thing. I mean, I visited with somebody this week, and it was like, this is the first time they've heard this information because we're still told and taught that we need to put everything pre-tax. We need to put everything in the 401k. That's where you need to put your funds in versus, okay, it needs to be a process, right? We need to have a multiple step process here where, like we've always mentioned, the emergency fund, financial vulnerability cushion, and then start putting in and investing in these areas. But to your point, this is a really nice opportunity to be able to put some assets aside, and especially with Secure Act 2.0, where you don't have that ability. If you have legacy intent, meaning you want to give your heirs something,
and you've stuffed all your money, like we've been told all the years, erroneously, to put it in pre-tax.
That's right.
Right?
But now you have a couple other factors at hand, right? So now you're gifting assets essentially when you pass, but everything will be taxable within the next 10 years. Well, where do most people inherit funds? Are they in the peak earnings years? Are they going to be taxed at higher rates?
Right, correct.
I mean, these are all considerations that you need to kind of go down the rabbit hole here and start to think about. What's the impact? How far does my dollar actually go? And so we talk about frequently, it's not just about managing money and markets, which is a very big part, obviously, but it's also the things that we can control, like these types of situations,
right?
And things you can do, these actions that you can actually take right now to keep more money in your pocket. That's one thing we can control. But we have to take a gander here that, hey, maybe we see higher taxes. What happens then?
I think the odds are greater for us to see higher taxes. And Danny, if it's not higher taxes out of your front pocket through marginal tax rate, I could see a lot of manipulation of the IRMA tables, right? Based on the social safety nets, how much of our money goes into things like this. More taxation on Social Security. Who knows? So the fact is, it's rare for someone to fall into the lowest tax bracket. Listen, it happens. We run the analysis, and Roth conversion's not going to work. What we will do then, and what I've done, Danny, is I will tell that person, listen, take out, here's your required minimum distribution. Take out enough from your next bracket into the next bracket because you're pretty much at the lowest bracket anyway. Move it to brokerage. Move it to an after-tax brokerage account. Invest it efficiently for gains over time, and if your children will inherit it at a step-up in basis. So maybe we don't have to take the step with Roth, but we are still following this objective of taking or trying to take some money or surgically prick that IRA pre-tax account and diversify our accounts and how things are taxed. Obviously, if capital gains are taxed as ordinary income, that's not going to matter either. Well, who knows? Correct. I haven't heard about that lately, but that's been floating around.
Well, there's a lot.
Actually, there's been a lot of stuff floating around, like taxes on money you haven't even realized, earnings you haven't even realized yet, which is I feel like I'm in the twilight zone of taxes with something like that. I mean,
CPAs have to be licking their chops here because they've got to be really excited about this because it's another way to bill somebody. Can you imagine having to? Essentially, you're going to have to get an appraisal every year on an asset.
So Danny,
right?
let's say last year, this was enacted.
Yeah.
And I had all these tech stocks, and I paid all these taxes on these unrealized gains, and I lost it all this year. What do you think would have happened? What do you think the government would do? Would they say, "Oh, well, now you've got all these capital losses too"?
But think about assets that aren't as easily trackable. Think about real estate. Think about
that
private
you have to get
equity.
these valuations
all these things
and that. Oh my gosh, they would have. Yeah, CPAs, valuation firms. They had to be like,
please. They're lobbying for this, by all means.
Gosh, I hope not, because then they're in that situation too. I mean, it's a terrible idea. How does he? Charles Barkley? Terrible. It's terrible.
It's terrible.
Yeah, just terrible. I like that Shaq commercial for the General when he goes, "I've walked in your shoes." Like he's got this woman he's walking with. He goes, "You ever walked in someone else's shoes?" And he's ripped her shoes to shreds. That's such a funny commercial. I spent a lot of time on TV watching the television. I got no life. Okay. So Roth could work. Unfortunately, you cannot unwind it anymore. You used to be able to do that. You used to get a do-over. And Danny, I don't even know why they took that away. I think that was dumb too. You should have at least one chance.
It seems like they want to take away any flexibility that we have in the sense of, making changes, right? Oh, you did this, now you're stuck. And so what Rich is referring to is that historically we were able to, if you did a rollover, a Roth conversion, if you did a conversion and your CPA or you did your taxes said, oh man, I did a little bit too much, I can save some money if I take, let's say you do $50,000, and you say, you know what, I could take $20,000 back, put it back in the traditional IRA, and alleviate a lot of tax burden. Well, now we're saying you're unable to do so.
What about if I, January was a good month this year, right? And I did a conversion in January because I want to get it out of the way, and I took my tech stocks and I went ahead and I moved them into Roth, and they lost 20 to 40%. But I'm paying taxes on this higher amount, right? And when you pay taxes on Roth conversion, the biggest mistake people will make is withholding taxes from the IRA. You want to make sure to pay your taxes from an outside source. If you're under 59.5, it can cause all kinds of complications if you don't. And it's just generally better to convert the whole amount. But now I do it in January. What a great chance I would have had, Danny, these few months to do it, to get a do-over.
Yeah.
And say, well, I moved 50,000, but now it's worth 25. Why do I want to pay taxes on 50? I could pay it on 25, but they took it away.
Well, that's why specifically we want to make sure that, and we've changed to do all typically Roth conversion distributions in the fourth quarter. We have a better understanding on asset pricing. We have a better understanding as far as what your income may be. People get surprised with bonuses, deferred comp, things they don't think about or fail to mention. And then you think, oh my goodness, I'm glad we didn't do this right now. But you could be stuck in a situation where you did it early in the year, said you wanted to get it out of the way.
Right.
And if you think you have the wind at your back, the market's going to do well, that's a great thing.
Yeah, it could have worked for you, right? It could have been that, oh my gosh, I moved 50 and now it's worth 75.
Yeah, we can be an armchair quarterback really easily.
All the time. But that's why we do wait, generally speaking, for the fourth quarter to do Roth conversion. But when you get a market derail, an event like we've had, this is a really good time to at least crunch the numbers and absolutely look at it. I think it's definitely a good idea to do so. Hey, I got a great email last night from my online savings bank.
Oh, yeah.
Congratulations. Your rate is going up.
I had one of those this week as well.
Did you?
I did.
You didn't get it from Chase or Bank of America in your brick and mortar bank.
Oh, no.
But you are getting it. If you're not looking at online savings and building up your online savings account, again, everything's all relative, but it's 1% now. But it'll still be ahead of anything you're going to do in your brick and mortar dinosaur bank.
Well, but they know, look, I mean, let's face it, people don't like change. They're not going to go out and typically shop these things. They say, you know what, funds are here, not going to worry about it. And what the brick and mortar banks have begun to do is that they say, hey, if you hold X amount, and they've always done this to some extent, we're going to give you all these additional benefits.
Yes.
The issue is, how many people use those benefits? Does it cost you more to keep money there and think you're going to get, oh, I'm going to save on a wire transfer fee, $35. But if you had it at an online bank, how much more would you make?
Well, because they want you to look at it from this mental accounting perspective instead of the whole relationship and what you're paying much more.
The expense.
The expense. They're smart that way.
Yeah.
They know we're mental...
Nobody likes change.
Looney toony. When we get back, we're going to talk about Secure Act 2.0 here on Financial Fitness Friday. Stay tuned.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Hurricane season is here, and along the Texas Gulf Coast, we know how to prepare. What we don't always know is which way the storm will go, and if a hurricane does come your way, whether your house will flood. Fortunately, you can get flood insurance. Unfortunately, flood insurance rates have skyrocketed. Don't be at risk. Let the specialists at RIA Insurance assess your needs and shop your coverage for the best rates possible. Another service from realinvestmentadvice.com. Click on the insurance tab, realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Hi, Danny. This is Janet Yellen just saying to you, I hope you have a nice, transitory, transformative weekend in your bed with your pillow and your doggies. Oh, because the economy's going to get worse, but I'm not telling everybody that. Just you. I'm going to whisper like the president, like it sounds psycho.
Man, I thought Janet Yellen slept in this morning. Evidently, thanks for joining us. So that was great.
I'll
Always
be back.
a pleasure to have you.
Because Brent left this funny on my on the desktop here. Sometimes I talk to myself and we both laugh. Yes, but you got to use different voices. Janet Yellen, you spilled coffee in the kitchen.
Oh, don't worry. It's fine. It's fine.
The stain is transitory.
That stain the dogs will get is just all it's transforming the floor into something prettier.
So we are going to be looking at yet another iteration of Secure Act 2.0. So obviously this retirement reform and all this scrambling around, yet, you know, it's very creative. It's helping people do whatever they can to make the most out of retirement accounts and so forth, but you got to have the discipline to pay yourself first. Maybe there should be a little bit about financial literacy in this Secure Act 2.0, Danny. What do you think?
Well, I think there should always be a lot more attention put towards financial literacy. Unfortunately, we're seeing that that's just been on the back burner. And we do all these or float out all these different ideas and plans. And the problem is that, one, they don't do a very good job of articulating them. Mm-hmm. You know, we could do a much better job saying, hey, here's the options and things that are available to you. But the other thing is that we're typically way behind the curve here. I mean, we're trying to do something way too late, and and usually it's not enough.
Yes.
We're going to allow you, it's like the uniform savings account that they floated a couple years back. We're going to allow everybody to put, X amount aside in a account that's not going to be taxable, but you can pull money out and use it. But they didn't give anybody any bandwidth to actually put funds aside, nor did they think about, who does this actually impact or help?
Right.
Because the people that really need it are likely not in a situation or a position to be able to utilize it.
Absolutely.
Unfortunately.
Absolutely. I mean, if you had a workforce that you could train and would be skilled, if you had the financial literacy tenets that even we grew up with that are sort of dead, that would help. But some of these provisions, first is the saver's tax credit they would have it deposited directly into a worker's IRA or 401k rather than lumped into any tax refund. And that the saver's credit will be fully refundable, which means, right, you're going to get, whether you are, if it's fully refundable, then what is it, that even if you don't pay taxes, you get a credit, you get cash.
You get a refund, basically.
You get a refund, right? So, but they're going to move that. They want to move that directly to a 401k where it could go into an ESG fund with 10 times the expenses of your S&P fund.
But that may be changing. We're actually getting legislation to actually look into this, which is great.
I hope so. I'm just not.
Yeah.
I don't have a lot of confidence, but I know there's a lot of talk of that, right? There's also a provision in this where if you have student loans, and you had to make a choice between saving for retirement or student loans, they're going to provide a stipend to where you can sort of do both. That's okay. This one I'm sort of okay with, Danny, and I don't know why. I got to think about it. But to allow workers to take distributions from their retirement accounts to pay for long-term care premiums. Because obviously long-term care is that financial elephant in the room, and most people do not have the funds to pay for it.
I love that idea. I mean, if you can take it at any given point in time and pay those premiums.
But you know what? Here's what I don't like. They're gonna say you don't have to take the 10% penalty.
Okay.
But it's still gonna be taxed.
Correct. Yeah. That's
okay.
That's a disadvantage.
If I have proof that I've moved money direct from my retirement account into a long-term care premium, right? I'm not blowing it on something. I'm mitigating a risk. Why in heck are you taxing me on this distribution?
That's where I'm okay with the refund, right? If you can prove that you actually did this.
Correct.
I think
there could be a tax form that says, here, it went into, you know what I mean?
Correct. Let's encourage good behaviors.
No. Everything always has to have the tax element to it. And they would say, oh, well, no penalty. Big deal. Big deal on the penalty if I got to add another 20% in taxes. It's ridiculous, right? So, they come up with all these things, but they're always half-aid, right? It's never fully what you want. And now we're going to be looking at maybe pushing out the required minimum distribution age to 73 years old. But I think it takes how many years to get to 75 years old?
Yeah, it's going to take a long time.
2032 or something like that, where then you would be able to wait. What's the purpose of that? And what is the and there's no clarification on these inherited IRAs, Danny, because what people don't realize, I've talked to CPAs who do not realize, I'm 75 years old. I've been taking my required minimum distributions every year. I leave my IRA to Danny. Danny has to take it out over 10 years, but the first iteration of this act was Danny didn't have to take required minimum distributions over those 10 years. He could wait. He could take whatever he wants over 10 years, as long as the account was drained. Then they put in this provision where, no, you have to continue at least the required minimum distribution. So Danny would have to make sure and be cognizant of taking out at least what the tables say, but at the same time, drain the account in year 10. It's very confusing, and there's nothing out there that clarifies this.
Correct. And that's the problem, is that there's been little or no clarification. They've changed the rules in the middle of the game.
Right.
Now, granted, if you've already started your distributions, you're still stuck and grandfathered under the old rules, which is, I think, a really good thing for most people, instead of having to take it out within that 10-year time frame. So, just to kind of dive a little bit deeper, what we're talking about is if you inherit an IRA from somebody other than your spouse, you're going to have a distribution period. If you've started, you have RMDs, required minimum distributions. But if now it happens because the rule change, you have that 10-year period.
Mm-hmm.
It's very transformative.
Colin loves my Janet Yellen impression. He just types, "Stop that. Stop that now."
Thank you, Colin.
Don't do it. Colin's going to get an award from Danny.
It's in the mail.
You're very rude. Very, very rude.
So we'll see what this Secure Act 2.0 finally really turns out to be. Oh, and then they're going to allow more leakage, Danny, where if I have an emergency, I can take out $1,000. So if I have it, and this happened a lot during 2008 and 9, right? I was pressing everybody. Listen, people are losing their jobs. They take money out of their IRA. It's another punch in the gut because they're getting hit with taxes and penalties. If I am out of work and I can't even tap this darn thing tax-free, at least do this for the financial crisis. Make it completely tax-free to draw money out of your... Yeah, eventually. But now they're saying, well, first of all, you shouldn't be using your retirement account for emergencies. And if I do have an emergency, again, yeah, I avoid the 10% penalty, but why do I have to pay taxes on that money? Which shows you have to have a hierarchy of savings. You don't put everything in your retirement account first. You set up your emergency reserve, your savings account. I know Danny and I are real conservative with this. It's not 6 months of living expenses. That's for the emergency stuff. The next 6 months is your financial vulnerability cushion. And that is someone loses a job, an illness. You do that. Maybe I just put into my 401k just up to the match and bolster my emergency reserve so I don't have to leak my 401k for stuff that I should be doing outside of it. So you've got to really create a savings strategy. Danny, I do this with a lot of younger people. I go through the hierarchy of savings.
It's very good, by the way. It transforms a lot of lives.
So how do I do it, right? How do I, as a 25-year-old, 24-year-old, starting my job, they're pushing me to put all my money into the 401k, to tell that person to step back and watch how your dollar flows. Here are the fields we need to, right? We need to plant seeds. It's not just this 401k, a big panacea. It's not just that. We've got other things that we have to do.
Well, I think that's really important to understand exactly what you're either leaving on the table or not addressing is huge, right? We want to build the foundation and we want to do it right so that you don't have that leakage. I know that drives you nuts, Rich. I mean, every time we see new legislation that gives the ability to take money,
they put another hole in the bucket.
Yeah. I mean, we have enough already, but we're not teaching people the right behaviors ahead of time, right? And so I think we need to understand, hey, get that emergency fund. And you need to understand also, we talk about, a lot of qualitative stuff here. How secure is your job? Mm-hmm. If you're a low man on the totem pole, maybe you don't need 6 months. Maybe you need 12. Mm-hmm. If you're a tenured professor, yeah, you probably don't need as much as somebody who's in sales or somebody
wouldn't
just
it be
started.
Nice to know? Yes, I understand. But wouldn't it be nice, Danny, like something you need to help a relative or something out that you do have the next 6 months regardless? But yes, if you have fluctuating cash flows, you may look at that hierarchy of savings. So they want me to do Elizabeth Warren imitation. How's that?
Thanks, guys. I'm gone. That's it.
Love you guys. See you next week. Bye.
Must be funny in a rich man's world. Money, always Sunday in a rich man's world. All the things I could do if I had a little money. It's a rich man's world. It's a rich man's world.